Let's move on to our last company now, Kryptonite1, formerly known as Guild. I think George Mcdonaugh is with us here, another investor in cryptographic assets. And they're just going to change the slides over there. So another view of a company which is surveying the whole blockchain scene, really.
My name's George Mcdonaugh. Thank you so much to the NEX for having us and for putting this event on. I haven't got any slides today. I'm just going to talk to you and tell you a bit of a story about what Kryptonite is and what we do. I first found Bitcoin in 2011 through a research project I was doing at an ad agency, and they call it falling down the rabbit hole. Within a month, I was completely transfixed by what this technology was. Back then, it was just Bitcoin. Blockchain even was the word used to describe how it worked, but it wasn't, at that point, hadn't been taken out as a sort of separate technology and the rise to prominence that it's had today. And so since then, we've lived through many different sort of epochs of cryptocurrency and how it's evolved. And my company is specifically based on an area of the blockchain ecosystem that evolved about two and a half years ago with the production of a new type of blockchain called Ethereum, which Eddie touched on. Another word for it is the token economy. Ethereum is a blockchain that allows lots of different tokens to move around and for companies to produce their own token. I thought one of the things to try and get across today is why tokens, why interest in Ethereum? What is it that's powering this large rise in value? And I think the thing to think about is what smart contracts are. Eddie touched on it. I see it in a slightly different way. Maybe another way to explain it would be that they are packets of code that can be uploaded to a chain that then processes that code, a little bit like a server. You could think of it like a server. So when you create a language that allows developers to be creative and head off and learn the language and start layering smart contracts in really interesting ways, you can produce decentralized businesses layering these smart contracts. And that's effectively what Kryptonite1 invests in. We invest in groups of developers who are using the smart contract language to produce a new type of business. Because the Ethereum blockchain is decentralized, it is permissionless, much like Bitcoin. Anyone can interact with it. Anyone can go away and produce a stack of smart contracts, upload them to the Ethereum blockchain, and the Ethereum blockchain will process that stack. Tokens are often what allows that stack to function. In a way, it incentivizes people to interact with that system. So ownership, equity, that kind of thing is of less interest to us. What we're primarily interested in is the token, because that is in the types of products that we invest in, which is slightly different to where Coincilium's interest is. So effectively, what we're trying to do is find these decentralized companies that the token is the sort of the purest aspect of that business. Perhaps an example would be useful. So there's a group of developers in the States who are producing a smart contract blockchain business, I suppose, that allows people to come to that that platform, create a market on any question in the world, and then allow others to come and buy shares in the outcome of that event. There's a product called Augur. I'm fascinated by how this is going to change the way people view the world. So if you have a company that has its smart contract infrastructure on the blockchain, no one owns it or runs it. It runs automatically. It cannot be taken down, and anyone with an internet connection can interact with that business. So if that business looks very much like a completely decentralized Betfair, where anyone can effectively come to the market and bet on the outcome of a presidential election or whatever it may be. The token in that product is where the sort of the central focus is. Mainly for the reason, and Eddie touched on it earlier, the blockchain doesn't know who won or who lost, Hillary Clinton or Donald Trump. So the system has to ask token holders to tell it who won and who lost. And in return, it hands over 50% of the fees to the token holders, the fees that are running through these markets. So it's a decentralized oracle. Eddie touched on an oracle earlier, which is a sort of centralized oracle. By handing out millions of reputation tokens, they're called, to the market, everyone is incentivized by holding their tokens to report into the system and resolve some of these markets. So I suppose the reason why I go over this is the sense that that's the kind of thing that Kryptonite1 wants to invest in. It wants to invest in tokens that have a central aspect to play in the decentralized business that's sitting on the Ethereum blockchain. And so from our investment perspective, that's very much where we start. What is the token? What are the token mechanics? If you take the token out of the system, does the system still work? If it doesn't work, if it's a central cog to the machine, then we will be very interested in looking further at it. There's another, I mean, I know it's rather strange, I'm supposed to be talking about Kryptonite1, but it's the best way of describing how we approach this investment is to look at some of the other companies we've invested in. One of the others is called Funfair. And Funfair uses, because there's no server as such, where they have the logic of their casino games logic are placed on the Ethereum blockchain. And so therefore they exist everywhere and nowhere. So you can, in that kind of situation, you can have a casino. They're not an operator themselves. They license their software to casino operators. But you get a huge, you get an array of benefits that centralized companies can't compete with. For example, every Funfair game, because it's written in Solidity contracts, smart contracts, is what's called provably fair. So you can know that by playing with this, by interacting with this, it looks exactly like a roulette game or however you'd imagine an online game to play. But you know that behind the scenes, because everything is done on a distributed blockchain such as Ethereum, that all the dials are set and cannot be changed. And that is already in itself game-changing. If you don't have server infrastructure, then and the Ethereum blockchain is effectively performing that role for you, well, you get quite significant cost savings. And if you can pass those cost savings on to players in terms of winning more, in terms of, I mean, effectively having a higher percentage chance of winning a higher reward, when you add those two things together, you end up with a business that looks very disruptive to the current vertical, that particular vertical of online gaming. So again, that was a token that we looked very closely at and invested in. So I suppose to come back to Kryptonite1, our main interest is clearly team. Who are they? What kind of track record have they got in the space? And then from there, we go on to the point of saying, well, what is it that you're trying to build, and what does the token do? And so far, we've had a lot of success at choosing some of these businesses. And I suppose one of the great things that we're seeing is that these tokens come to market very quickly, very often. And when they come to market very quickly, you can change your risk appetite almost sometimes within a day, up to a sort of month. So you can take out, very often you can take out what you put in at a multiple, and then you can immediately recycle that back into another project that's sort of waiting in your pipeline. And that means that you can do a lot of investments very quickly over a very short period of time in quite fascinating projects that have potentially gigantic disruptive capability. And lo and behold, some of these projects do very well as well. So we're seeing our ability to move into projects rise exponentially, which is brilliant. Just to give you a few examples of some of those, we started a year and a half ago specifically to look at the token economy and effectively just buy tokens. So one of our first plays was into a project called Melonport, which is a decentralized hedge fund management platform where you can manage various tokens and put yourself forward as a manager of those tokens. And we invested in that. We started, it was around $4. I think it's hit a height of around 100. We then went into another project called Golem, which was on Eddie's slide. That started at 1 cent and has hit 66 cents. And then we also recently went into another project called Amise Go. That we bought at around 24 cents and has hit just under $13. So the uplift on some of these are truly extraordinary, but obviously you have to have picked the right ones. And as Eddie also alluded to, there's thousands of them now. And I'd say that if any of you are interested in moving into the ICO space and looking at it, the token should be your very first port of call. Well, team, obviously, can they code? Can they do what they say they're going to do? But after that, it's really looking at what role the token plays in the platform, and that's our central focus at Kryptonite1.
Okay, well, my head's spinning.
Yeah, sorry, it's a bit of a brain dump.
Is there an understanding gap? Is this? I mean, all investment has its issues clearly, but I mean, this is pretty tricky stuff, isn't it? And I mean, I'm just playing devil's advocate here, but for some reason or other, the word Enron came into my head when you were explaining some of these contracts which people didn't understand.
I think the main thing to think about is this small phrase, digital scarcity. The blockchain allows, for the first time, really, someone to own something in the digital space and for it not to be copied, and you own it at that particular space and time. No one can take it away from you. No one can confiscate it because of the level of encryption and the way that the ledgers of who owns what are dispersed globally around the world amongst neutral participants. So it can look very much like tulips and smoke and mirrors, but really what it comes down to is the blockchain and how that is a way that everyone can effectively trust the mathematics. And yes, there's a spectrum of projects, and my job is to get Kryptonite1 investments as close as possible to the side that effectively has the token at its heart, which is, I suppose, the message I was trying to get across.
So what are your ambitions on returns? How does it work? How quickly do you get money for investors?
Generally speaking, what we like to do is it sounds a bit cute, but we take out what we put in at 5x, and then from then on, each project has its own roadmap, and we manage our tokens alongside the roadmap of that particular project, because we know various projects they'll have pre-ICO they'd have released to the market what they hope to do. It's much like any company who says they have a plan. From our perspective, just quickly, one last point. We're getting in earlier and earlier now. So we haven't really done an ICO for a few months now. What we're doing is we're having conversations with teams who are just about to embark, I suppose, on some of these token projects, these decentralized projects. And because we know the space and because we can understand what they're saying to us, we can come up with a pretty good judgment as to whether what they're planning on doing sounds feasible. And so we're making bigger investments earlier on in the chain, and then also advising projects as they move forward.
So, any more questions? Yes, plenty. Okay, one in the front here.
You gave 3 examples of good returns. Can you now give us 4 examples of bad ones?
No problem. So we had one project that we moved out of at cost. So we put in at a certain ether price, and we took out at the same ether price, so we didn't lose. We have one project that's currently probably 10% below ICO price, which, to be fair, has a long development schedule, should we say. And like I said earlier, some of these projects, there's always new shiny things to look at, and so we can see from time to time that some of these projects lose favor for whatever reason. It's not that the original technology was bad or that the project team can't produce. It's just they've got a two-year roadmap before they can actually even deliver a beta. So the price will sort of sink. Not normally far below ICO price. That's probably the one that's currently sitting just below. But we believe in the technology, and so we'll see where it goes. But I think those are the only two that are sort of either where it was or just below.
Another question over here.
Thank you.
In regards to the ICO space, I actually work as an ICO advisory. I think in terms of the crypto funds, I've always been very questionable about them for the long-term longevity, because what we're seeing right now is we're in an environment where crypto, I like to use the term crypto investors very lightly, in terms of the due diligence that they do. What we've seen is coins like Bitcoin and Ethereum have like 10,000% returns. So you've got a market full of people who are uninformed investors who are looking for the next. Like I've seen websites that are stating, like Plexcoin, for example, said if you give us your return on investment, what they actually had on their website would be 1,529% in 29 days. Why is this not regulated? That's a big problem. Like deregulation spawns things like this. I think the big thing for me to understand about a crypto fund such as Kryptonite1 is that once this becomes regulated and once these ICOs have to become more stringent and once these people realize that the government's going to crack down, these 10,000% returns aren't stable. They're never going to be like that. The bubble, you can compare it almost to the dot-com boom, but what would happen in the long term for a crypto fund if you're looking for, like you said something like we bail out at 5x. If anyone has a 500% return, find me that company kind of thing. I'd love to jump in. That's a really great thing. But is it sustainable in the long run with the environment as it is?
No, I'd say that these kinds of returns probably aren't going to exist forever. And certainly we're going to see a situation where a lot of these projects just don't deliver. There's too many for all of these to come back with products that are working. And like I said before, I suppose it is unregulated. There's a lot of trapped money in the system to some degree because there's not a lot of interest in taking it out. And obviously people are going to speculate on what they've got. So there is that problem as well. I think one of the problems when it comes to regulation is, well, which government, and to some degree, jurisdictions, power jurisdictions around the world are in some kind of game theory dance with each other, but although they might not know it yet. I mean, you look at what China did and then see what happened in Japan. We saw that the New York bit license came in and everyone moved to Panama. To interact with these sales as such, I'd say the problem isn't so much investing. The problem is more issuing tokens.
Eddie, do you want to just come
Sorry,
on this briefly?
No, that's fine.
I've talked too much.
And just take a couple more questions after that.
I think what's interesting also is to point out that, of course, the public and the media are going to focus on these returns, and it's great that some funds and some individuals can profit from that. But it's still a company, still a project, it's still something getting built, mm-hmm. and I think it's basically a lot of noise and a lot of information to absorb these days, and that's basically the difficult part, But at the same time, you're going to get great decentralized apps, great platforms coming out of this. So I think and as I was explaining before, for some companies, it's kind of separated. You know, the token is in a way almost like a share, although it's not legally a share in any way. So basically, you have sometimes a company building something and then the share price going somewhere else. I mean, we've seen that on major companies. You know, Amazon share price hasn't gone up that much, at first, right? And still, they were building one of the largest companies in the world. So I think what is of interest here is that although we cannot now rely on the private equity kind of length of investment, because we were saying we made 362% return on Satoshi Pay in about less than a 2 years scale time frame, and obviously that's much less than what a fund specializing in token can do on a 3 months, for example, or 6 months. But at the same time, if you start going beyond that, we hope to get a very nice return on a much lesser time period than a private equity fund, for example, which is struggling these days to make, I don't know, 10%, 15%. But I think there is still, because of also this mass adoption and the fact that there is a lot of noise, but at the same time it attracts a lot of people and hopefully users who are going to use this platform. So that's basically a way to look at it as well. Just companies getting built, and yes, they're raising funds through issuing token, but
Okay.
that's it.
Right, it's a question over here.
So I'll have more questions for you. I'll start with the first one. You said about 5 times the return, and then you take the cash out, or I mean, you want to cash out. We
want to cash out the initial investment.
Oh, the initial
Yeah.
investment. So you still hold.
Yeah, absolutely. But internally we call it the trophy cabinet. So what we do is we effectively keep all of our investments to some degree, apart from the one that we got out with the same level that we went in at. That's the only one we no longer hold.
Okay. At the same time, there are currently tokens who don't get liquidity for certain reasons, and they are trading below ICO price, even though they are very good projects. So if by any chance you are involved, and I'm sure you are involved with some investment in some of those tokens, will you still hold them until they get listed? Because maybe the investors, they don't know how the liquidity problem works in cryptocurrency, but is the main issue in making the difference between gains and losses in crypto.
Absolutely, there is a shall we say, a traffic jam of ICO companies who are trying to get onto exchanges. The exchanges now have sort of putting out messages to say we can't take any more, and if you can't get in on an exchange, well then price discovery is very difficult. You're absolutely right. That is a problem, and we back our initial thinking on whatever project we'd gone into, and to some degree, if it's a winner and it does very well, and we take out our money to move in. If it isn't, and we still believe in the project and the people, we will hold it until the market catches up. Absolutely.
Okay, so that leads me to my next question. I hear a lot of times the word bubble, the word .com bubble, the word ICOs are bad, ICOs are scam. So I think for a lot of outsiders, those are the real issues. But on the same time, I think that for the insiders, the real issue would be the Ethereum bubble and the ICO bubble. So do you think that right now we are in an ICO bubble and that the bubble will burst at some point?
So my answer to this question is that you basically have all the characteristics of a bubble. So one of the characteristics is, first of all, the market. If you look at the curve, the price of these cryptos has gone very high in a very short time span. The second characteristic is that a lot of people are buying tokens and they don't really know what they're buying. They don't know what the team is doing or what the technology is about. So that's another characteristic of a bubble. But at the same time, you have to look at the 90s, and in the 90s, I was looking. I would have liked to buy an eBay share when eBay did its IPO in '97 or '98, and I couldn't, right? I mean, I wasn't in the US. I didn't have a brokerage account. So basically, today you have this massive global community. Someone in Latin America, someone in Singapore, someone anywhere can basically, if they have access to internet and a wallet, they can buy this token. So I think it's the first time we have this kind of asset class where anyone can buy, and I think it's going to have different dynamics in that sense, in the fact that, as George was saying, China and Japan, for example, are playing this game where Japan is issuing licenses to exchanges, is accepting in a legal way Bitcoin as a payment, and you have hundreds and thousands of 10,000 of points of retail points where you can buy in Bitcoin, while China is saying, well, we ban ICOs, for example, and we don't want people to pay in digital currency. So you have this game, but at the same time, in some ICOs, you have Koreans buying 30% of the token sale. So basically, it's a new kind of bubble in a way. It has all the characteristics, but we see that there's going to be different dynamics there, and it's possible that the market is stabilizing more because of the fact that anyone can buy these assets. Hopefully, if they understand how this works.
So my question for George specifically, because you have a lot of ERC20 tokens in your portfolio, will be right now the main issue of Ethereum is the scalability.
Yes.
It's the reason why in the very near future a lot of the projects, even if they are fully developed, they cannot act in the way the developer wants. And if we at some point we have, for example, hard regulation on ICOs, and then the price of Ethereum goes down because the price of Ethereum is currently related to the ICOs on the market. So if there's need for Ethereum in the ICOs, then the price goes up. Okay, so my question, to summarize it, is if Ethereum goes down in price because of the regulation on ICOs, and on the other side, we don't reach the scalability in time to see projects like Augur, like Funfair, or like other projects, Golem, let's say, performing and giving Ethereum value, that's the point where, in my view, Ethereum will burst.
Will burst. I mean, I think it's certainly a possibility. It would be clear to me that at the moment, all the big brains working in the Ethereum space are all working on scalability. We've just seen a paper put out by Vitalik on a project called Plasma. Clearly, they've been working on a project called Casper since day one. I don't know if anyone knows, but interestingly, in Ethereum, when it was built, they have something called a difficulty bomb built into the infrastructure, whereby the system has to move through to what's called proof of work to proof of stake at a particular juncture. Otherwise, the system will grind to a halt. And I think they put that in so as to make sure that they worked on scalability from day one. However, that difficulty bomb is movable. It's going to happen, but it can be delayed. So it's all hands on deck basically to work on this scalability problem. That's absolutely true. As a business that invests in that level of infrastructure, I think it's a good problem to have in a way, because it's going to be if you invest in the right sort of company that's going to solve that problem, if they have a token layer, they might not do. Then you're going to see fantastic returns on that particular product. So I think it's clearly a big issue that needs to be sorted out. But I'm pretty confident that shall we say, the impetus to make it happen is there. But certainly, if they don't solve the scalability problem and the regulations change or come into force in some way that affects the market deeply, there are some jurisdictions who say no, and people shrug their shoulders and say, okay, whatever. And then there are other jurisdictions that if they say no, really will affect things. So yes, be vigilant, because it's a plausible scenario.
Okay, George, and just very quickly, you got into this in very recent years, and obviously you've got this tremendous knowledge of what's going on. Any reading, because there is this understanding gap, can you suggest anything for interested investors to find out more about this before they plunge in?
The Blockchain Revolution is a book by Dan Tapscott.
Okay.
That seems to be a good place to go initially. Otherwise, I'd say YouTube is your friend. YouTube Ethereum, YouTube smart contracts. There are some great people in the space who can communicate the space very well. A chap called Andreas Antonopoulos. When he gets up on stage and talks, it's a very good way of understanding the space. But yeah, just search away and try and find the hours to do it. I think that's one of the problems.
Sure.
There's an interesting, another place to go would be Netflix. There's an interesting documentary on there about the blockchain, and one of the first things you see in that documentary is someone saying, put down your phone, put yourself away in a room, and do blockchain all day until you get it. Because it'll be the best.
I think you've just done the last series of Breaking Bad.
It'll be the best. It'll be the best 20. Best day that you spend. And
Great.
so I think that is probably the big issue, is finding the time to actually get into this.
Well, wouldn't it be fascinating to come back here in a couple of years' time and see whether we're all a bit further along the learning curve? Thank you both very much. Thank you all very much for coming. On behalf of London South East, these two guys are still around. I'm not sure. I think the others may still be out there. Please come again to our next event. Watch the London South East website. Thank you.